Hey YouTube, this is Leo with DRIPCalc, and in this video I want to talk about selling covered calls and cash secure puts on TSLL. And this is a 1.5, I think it's a 2x leveraged ETF on Tesla shares, and it actually also pays small dividend, about 6%, 7%. So last time it paid the dividend was in July, beginning of July, and so if you own the stock right now, soon it will go ex-dividend at the end of September, and then I expect a payment somewhere in beginning of October. But this video is not about dividends, although it's nice to collect some dividends on this thing. It's about selling cash secure puts mostly and some covered calls. So here is my wheel tracker for TSLL. So the current price is $1.61, give or take. It updates every few minutes, and basically here it shows that I have 503 shares, but I actually do not. I only own 3 shares of this stock right now because I was assigned. I sold a covered call over here in this line, and you see assigned, and at the time it was like $15. So I was like, I'm not gonna chase it. I just get assigned. I made about $1,000 on 500 shares because my cost was $7.04. That's what I actually paid for it. That's before any income from cash secure puts, and I'll walk you through it and describe my strategy with it. So before we begin, guys, please smash the like button, subscribe to the channel. If you have any questions, ask them in the comment section below. I'll use some terminology. If you're not familiar, just ask and I'll try to explain it in the comments, and also as I go I will try to be more descriptive. But anyway, second thing, this is not a financial advice. So if you are to do something like this, you're taking a risk. This stock can go down to zero. Well, probably not to zero, but you can experience substantial capital loss, whether buying the shares or selling puts or selling calls or any of that stuff. So do not follow me. I'm just explaining what I'm doing with TSLL. Walk you through my wheel tracker or options tracker. I just want to point out this is the total income I made from selling calls and puts. And if I was to do it today, here's exactly what I would do. Now I would wait for TSLL to drop below $10, somewhere in like 950 range, and then I would go, say, a couple weeks out, or up to 5 weeks, but probably like maximum 4 weeks out. And usually what I do is I try to collect about 1% in premiums per week. Okay, so that would put you, if I was selling a 4-week out option or selling 4-week out puts, I would want to collect at least 4% on that money, on the collateral. So for example, if I was selling a $7 put, so this is like 32 days out right now, it is, you would collect 26 cents, and so that's, let's call it 5 weeks. So let's open the calculator, and so basically you take 26 divide by 7, boom, that gives you 3.7%. so that, in my opinion, is a little bit low. Now you can collect that on a $8 put, but I feel like it's a little bit expensive. And now if TSLL was trading about $9.50 right now, this would pay, with the $7 put, would be paying a lot more. So I try to be about, so I look at delta. This is 10% delta, 10 delta. That's very unlikely that you would be assigned, but Tesla has crazy moves. So you can see over here like went from 175 to below 140 in just a matter of a week, essentially. And so that would bring, that's about 25%, 20%, whatever. That means TSLL goes down by 40%. So that's kind of risky. And so I would just like catch a down day, a big down day or down week for Tesla. That means that TSLL is also down big. And then I would sell like a 15, maximum 20 delta put. So if you look over here, this is 17. So this is a perfect delta where your chance, essentially delta is somewhat like a chance of getting assigned, and it is about 17%, and so it is unlikely to get assigned. So right now I might actually sell a put like this, but just a couple of days ago I collected 65 cents for it. So I feel like if we were closer to the expiration, say like 3 weeks out, 4 weeks out, 3.5, then probably 46 cents would be good. But again, so if you look at calculator, 46 divided by 7, so that's 6.5%, 6.6%. That's actually a pretty good yield, and your delta is 17. So I think it's still a good opportunity, but because it is after the 10-10 event, I feel like it is a little bit on the risky side. So I won't go over earnings or over a big event like 10-10. And usually with Tesla, it's like sell the rumor, buy the rumor, sell the news. So people would sell right before what usually happens with Tesla, often price runs up, then people get disappointed. Elon was sleepy, blah blah blah, and share price drops, and so there's a big elevated risk of that. So like over here, if you look at 1050, the chance that you get assigned is 42%. So that's way too risky for me. I don't want to get assigned at $10.50. So an $8 put on October 4th is actually not that risky. The delta is only 11.5, and yeah, that's something I would actually consider. It's like 3 days away. I mean 3 weeks away, a little bit less, 2.5, and we look 18 divided by 8, 2.5% for 2.5 weeks. So not ideal. So and again, because TSLL is kind of run up, so I would wait for it to drop, and then I would be more comfortable buying like 15 to 20 delta, and you collect essentially, basically my target is at least 4% return during of the contract. So essentially, if you're making 1% per week, then your actual yield over a year is 52%. Now, if we look at our spreadsheet over here, you can see that I close most of my options early. So for example, this one was expiring on 6/28, and I closed it just 6 days into the contract. However, my yield is 250% and my total gain is 89%, because the price of the option went down significantly, and I was like, why, I'm at like almost 90% profit. Why keep it for another 11 days? What am I gonna gain? Another $15? So I'm just like, okay, I'm gonna close it and not risk. And if there's another opportunity, I can just sell another put at that time. So I guess the price of TSLL went up over here on June 16th and June 17th, and we can actually look it over here. June, yeah, see, 16, 17, it ran up, and so I closed it because it was getting further away from my strike. So that's my strategy. I basically open a contract with a relatively low delta. I don't want to risk it, and still I want to collect about 4% or 1% per week. If I can collect more, then it's great. And then if I see that my options become really cheap and I can close them out, then why wait? Why, like for example, again, for $15 I would wait 11 days. What's the point? I just closed it, paid a little bit. Like even over here, it's a little bit more. It's like 15% left on the table, but I closed it once again 11 days before expiration. So and I already had it open for 20 days, but here it only was open for 6 days. So if I see that it became really cheap, I just close it and wait for another opportunity. I don't try to squeeze the lemon as hard as possible. And this here, right here, I actually bought a put. This wasn't a sell, this was a buy, but TSLL kept going up, and when I saw the opportunity, I'm like, why keep risking it? I feel like it's gonna explode, so I just closed it out and made $21 on it. Not a huge gain, only 11%, 3 days, but yeah. I would lose completely on this contract. I would lose this $164, and instead I made 21 bucks. Not a huge gain, but I got out of it. Instead of losing money, I still made money. So yeah, now let's look at this whole spreadsheet in detail. So this is my tracker. It has the dates, the strikes, the option type. So calls and puts are option contracts, the amounts that I collect, and here's the grand total. So I started doing this right here on April 2nd, and if we look at Tesla, so again, this stock, it tracks the performance of Tesla stock, and it is, I would say, yeah, it's 2x. So we need to update this description because it used to be 1.5 and it went 2x leverage. So we just need to fix this. But basically, back in April, you can see here Tesla was not having a good time, and it went down as low as like 130 something. We can look over here. 52-week low, 138, just under $139, and this happened right over here at the end of April or middle of April. Okay, so Tesla wasn't having a good time, and I started selling cash secure puts on it in April. I was just basically learning my way through it. No, actually no, I bought 100 shares and I sold the call. Okay, made 35 bucks. That expired worthless because you see the expiration was 426. And as Tesla stock was going down, TSLL was going down even harder. So I sold an 850 cash covered call, but you can see here it was 715, so it expired worthless. And I kept selling calls, buying a little bit more shares. So usually I would take the proceeds, this 35 bucks, buy a couple more shares. And then in May, I sold another call, 973, made 25 bucks. So basically, here's my call history. I didn't make a lot of money on calls. So this combined right here is, including this one, $235. So I made, I mean, it's decent. And at $7, that's like 40 shares, 45 shares that I bought with the options premiums. So that's nice, not bad. And then over here, the call that I sold, I collected another $230. So about $500 I made on the covered calls, for 465 to be exact. And then I got assigned, so I collected $9 per share and made like $1,000 overall on those shares. Now I don't have them anymore, but if I change this to 3, this will look like crap. You see, everything turns negative, so I'm not gonna do that. I know that I only have 3 shares. So all right, the real money were made in the puts. Okay, so I was experimenting with the puts, so I did it slowly, and I separated calls from puts just for simplicity, for my own reasons. But here's my first put, 416. Again, if we look at TSLL price, April 16, it was going down. Right here, it was like 638, and I sold 550. So the lowest it went to was like 519. But I was not assigned. I bought it back in May for $1. Okay, so here is the gain, the total gain, and here is the yield, the annual yield. So 97% total gain and 108% annual yield. Okay, so I tested the waters. I sold one put. Then a few days later, I sold another put for 42, bought it back, and so again, almost 90% total yield, or profit, and 99% annual yield, which is very nice. And you can see here this this column, most of the yields are like in the high 60s, 70s, and some are about 100% yield. So as you can see, most of my profits on this TSLL option strategy is from selling puts and not selling calls. So I made $465 on calls, and at the same time I made, so here, I don't know if you can see it on the screen, $3,600 on selling puts. So basically right now I'm making money on these shares, and I basically only own 3 shares, and I'm making, you know, a few $100 a week, a couple hundred. In fact, if we, so over here we have April sales, and so we can sum it up, we get $1,371 that I made in the month of April selling puts. Now I do have to put up a collateral, but this is where it gets even more interesting. I actually don't put my own collateral. I use margin on Robinhood, and like, I don't put up my own money. I collect the premium. I only own 3 shares, so let's call it I don't have any shares of Tesla, and I'm making money on it. I mean TSLL, and I'm making money on it, which is kind of insane if you ask me. Now, yes, there is a, we can call it a risk that I have to buy the shares if the price of TSLL drops down, but I usually sell deep in the money, or deep out of the money, far out of the money puts. And you can see here I only have 2 more positions opened. So one of them expires in about 10 days, no, actually 20 days, so 3 weeks from now, give or take, October 4th, and that's a 750 strike, and I collected $175, so $25 per contract. I have 7 open, and my collateral is $5,200. Now I am completely okay buying the shares at 750. Look at this, like, I don't have the shares right now. I was assigned, but if I had the shares at average $7, my actual cost after collecting all the premiums, and this doesn't include $1,000 that I you know, capital gain from selling those 500 shares, my actual cost with the premiums from all the options that I sold is $140. So cost per share 30 cents. So I'm okay, you know, grabbing another few shares, because my cost would be pretty low if we consider, you know, the money I have already made. And you can see the total gain. Now the total gain is incorrect because it assumes that I actually have the shares, but I don't. But the wheeling profit, $3,400, that is right here. So this is the total profit from all the options selling, and I'm completely okay you know, if I get assigned on the shares, that means Tesla really drops from here. And again, it is highly unlikely it will, because this is prior to 1010 or a FSD event or robotaxi event. So I think Tesla will actually go up right prior to that event. And so here's the thing. Like I said, I sell far out of the money options. And if we look at the options chain, so this is October 18th. Let's look at the October 4th. So you can see if you sell, this is a call. Let's go put, sell put. Okay, and here it shows I have seven options, 7 contracts open, and I opened them at 25 cents. So now they're 12 cents. So I can already close this with a nice profit, but I don't think I will actually ever get a sign. So I'll just keep it going. The great thing about margin on Robinhood is I don't get charged interest while the margin is, while it's used as collateral. So until I buy something, I don't pay interest. And again, guys, not financial advice. Don't follow me into this. This is risky, but the reality is I borrow from Robinhood. I don't pay any interest. I collect premium, and I'm actually okay being assigned at 750, because it would actually be 725 because I already collected 25 cents up front. So that's a great price. But right now I'm not willing to buy the shares at today's price. But at 750 I am completely okay with it, because basically I'll get my shares back that I sold, a couple more on top of that. Now you can see over here there's like a gap, basically a big gap. There's over here 724 I sold 6 puts. So 724, that's July 24. I believe it is after Tesla reported earnings, July 24. Yep. Okay, so there was a big drop in Tesla price. So I wasn't doing anything over here. The Tesla was way overpriced, and TSLL was also way overpriced. It was like, I got assigned over here on the 19th, and it was like $13. July 19th, it was 13 bucks. I got assigned at $9. So that's like, I missed on $4 per share, but you know, whatever. But I wasn't selling anything over here until we got this drop, and then it dropped further. And you can see my activity during those times was kind of small. Like that was the only contract the only position I opened in July. So this huge run up in the Tesla or TSLL price, I completely skipped it. I didn't want to be involved in this crazy run up, because selling puts over here, like you couldn't get anything decent below $10. And you know, the shares went below $8 again, and so I would get assigned at like 13 bucks, 14 bucks, or even 12. I didn't want to risk it, because from 12 down to 8, that's a 33% drop. I didn't want to partake in that. So that's my position. Basically, I wait for Tesla to drop. TSLL follows even harder. It drops twice as much as Tesla. So if Tesla moves 1%, TSLL moves 2%. That's how it works. So Tesla goes up by 1%, this moves up by 2%, and down the same percentage. And so that's why it ran up from like $8 to 16, 100% move, you know, in a few days. And I was just like, I'm not doing this. It's way too expensive. It's crazy. It will probably settle down, and it did. And so right now, over here, I sold a couple more puts when it ran down to around $9. But I stopped, and I'm waiting for it to go below 10, preferably to the low 9s, even maybe below 9. And that's when I'm going to start selling some more puts. Right now, I only have 2 positions. So if you look over here, here are my dates. By the way, so what's interesting, most of this August puts I closed. I only held one of them for 28 days. The rest of them I held for about 2 weeks. And you can see the annual yield is like 200%, 214, 85, 116, 217. Some of them are like 61. That's a low. 51. Meh. But you know what? It's still, it is because I held it for a while. 16 days, it's kind of long. 28 days, it's very long. So I held from August 14th until I closed it on, so here's the closing date, 9/11. Okay, I probably just should have left it alone, but it was so deep in the money. Like my profit was like 91%. So I'm like, might as well just close it. You can see I closed it for 3 cents per contract, and I sold them for 34 cents. So it was like, just in case Tesla takes a massive dump and these puts become very expensive, it basically, by releasing the collateral, I open myself to having more money to play with. And then I can, if Tesla takes a massive dump, I could sell more puts, and I could use this freed collateral to actually increase my position. at a better entry point. And so yeah, basically I wait for TSLL to kind of drop. Now I don't know where it's going. Usually these leveraged ETFs, they you can see for the most part of the year it kind of stayed over here. It stayed in a $7 to $9 range, and over here it's like $8 to $10 range. And so the thing is, whereas let's say for the duration of the year Tesla is flat, okay, it goes up, it goes down, it goes up, and it goes down, but and we can clearly see it here. So in the beginning of the year, this year to date, TSLL was $14.50, and Tesla, it was $2.50, whatever. But Tesla is down 9% year to date, 9.22% year to date, and TSLL is down almost 27%. And so that's the reality of leveraged ETFs. And basically, let's say Tesla TSLL is $100, okay, $100 per share, and let's say Tesla moves up 5%, so TSLL moves up 10%. So now it's $110, okay, and let's say next day Tesla moves down 5%, so it basically, almost where it was before, but now TSLL moves down 10%, so you subtract $11 from it, because now it's 110, 10% of 110 is $11, so now it becomes $99 instead of 100 before the moves happen. And so when you compound that time and time again, this is where you see that TSLL total return is much, negative return is much bigger than that of Tesla, although it should theoretically be more or less flat or even with Tesla. No, it's not, because of the 2x leveraged. And so because of that, I do not sell long dated puts. So the longest I would go is like a month, 4 weeks out, and I always try to time it to where TSLL kind of drops in price. I don't think it will actually go high unless Tesla just starts running together with the with the FSD, the robotaxi. If that happens, if Tesla like runs to $300, TSLL will do really good. Or if Tesla goes to 350, TSLL will outperform Tesla tremendously. But at the same time, when Tesla has a correction, TSLL takes a massive dump. And so that's why I don't go long term. I try to time it where it actually is kind of in a lower range. When it's expensive, I kind of, stay back, wait. There will always be another good opportunity to jump in. There are always other stocks to play. And yeah, basically essentially I don't own any of these shares. And I'm making money on it because I can use Robinhood margin. I'm not, until I am assigned, I am not getting charged on this collateral. So yeah, I believe it's a great vehicle, great way to make money. Now, this may seem like a small amount, $3,400 in like, 5 months? But actually, first of all, it is a lot of money. $3,400 is a lot of money, especially that I don't own any of the shares. And then consider that I also made $1,000 capital appreciation when I got assigned. But that aside, I was taking it easy. I was learning the stock. I was learning its movement. And, also Tesla has to, because it's a leveraged play on Tesla, I also keep Tesla in mind. And so you can see slowly, I was starting with 1, 2, 3 contracts. And I'm slowly increasing. Here I had 8, here I had 10, but it is really low, like 650. So when it's really that low, I am not, I feel more comfortable to increase the amount of contracts that I have. Also, it depends on how much margin I have. I don't have unlimited margin, and so right now my collateral is like $7,600. I don't have unlimited margin, so I would rather not load it up with while TSLL is expensive, in my opinion, almost $11. Here it was like $9.20 a couple of weeks ago, like 10 days ago it was $9.20. Now it's almost 11. So yeah, I'm not touching it here. But if I feel that price of TSLL really drops down and I feel like Tesla is oversold, that's when I go heavy on the contracts. And the beautiful thing is, like, it's not even my own money. By the way, here in the beginning, I was using my own money. That's another reason why I had so few contracts, because you have to put up your own cash. I didn't have a lot of cash available, but with margin, you can play with more money than you actually have, and it uses your other shares as collateral. And anyway, so this is not about margin. This is about how I was making money with TSLL. I continue to do so. My plan is to wait for it to have a correction a little bit, but get back below $10. That's maybe I will open a few more contracts. But yeah, this is a really viable way. Guys, I'm making money without actually owning shares. And as you can see, as I learned the stock, I increased my positions, I increased the risk a little bit, but I tried to go really low. Like, it actually never went this during this time. So if you look over here, it only went below $8 over here in the beginning of August 7th, and that's when everything collapsed. That's when August 5th happened. But over here, it didn't really go near $8. And my highest put is $8 over here. So expired yeah, I bought it back on September 5, so like 11 days ago. Bought it back from, like, I only made 66% on it. And this one, the premium was really good, like 65 cents. And you know, 7.35. It's a pretty decent price for me, so I'm okay selling it. I sold it a little bit over a month, like 5 weeks out, but the yield on it is pretty amazing. So yeah, and it's right after, or a week after, the robotaxi event, so I didn't go heavy. I only have 3 contracts, and if I get assigned, well, first of all, I can roll it out, because if you're like in the money and you don't want to own the shares, you can roll it out, maybe collect a few more cents, but definitely lower your strike price. This way your assignment price would be lower. But at this point, I'm okay owning 300 shares of TSLL at 7.35, even if Tesla takes a dump after 10.10. But whatever, yeah. So this is my strategy. Once again, guys, not a financial advice. So you know, be careful with this. This is a very risky strategy, but a very profitable. You can see the margins on this are amazing. The gain, typical gain, we can actually go over here and use the average. Average is 77%, and over here the average yield, actually let's only do puts, average yield is 108%. So yeah, very profitable. I want to increase my exposure to this as I free up collateral availability, and as TSLL drops, and when TSLL drops in price, and when I look at it and say to myself, okay, I'm comfortable to own it right now, that's when I will increase my position. So good luck to all. Final warning, not a financial advice, but I love this stock. Love playing the cash secure puts on it. So guys, thanks for watching. Once again, subscribe to the channel, smash that like button. If you have any questions, put them in the comment section below, and I will see you in the next